couple of weeks ago, I recommended a bunch of specialist real estate investment trusts, especially the data center REITs. With millions of people working from home, you need more data center space to support all the cloud-based software they're running. I mean, that's why these names have been such consistent winners during the lockdown and certainly separating themselves from the rest of the REITs, which are often losers now. Take Digital Realty. It's one of the largest data REIT CEO in the world. It's bound for 3% yield. They own and operate huge server farms, both here and abroad, especially with last month's acquisition of Exxon, and that is a major European data center firm. Digital Realty was the fourth best performing stock in the S&P 500 during the first quarter, up 16%, while the averages got poleaxed and hasn't slowed down. It's up 7% since I pushed it just 3 weeks ago. Can this stock keep climbing? Let's take a close look with Bill Stein. He's the CEO of Digital Realty. Get a clear idea of how his company's doing and where it's headed. Mr. Stein, welcome back to Mad Money.
Thank you, Jim. Good to be here.
Well, Bill, I've got to tell you, you've been spot on and everything. I want to start on a bright spot. Too many people are negative. Today is Earth Day. And you did announce the project, a gigantic one. And I want you to talk about it because I think it's going to make everybody realize how far we've come in this world.
Be happy to, Jim. So you're right. Today is Earth Day, but sustainability is one of our top priorities every day of the year. We're focused on sustainability because it matters to our customers and because we think it's the right thing to do. Today, we announced a new energy agreement to supply clean, renewable wind power for our data centers in Dallas. We've more than doubled our renewable energy sourcing over the past 2 years, and last year, our renewable energy efforts avoided 500,000 metric tons of carbon emissions, which is equivalent to taking over 100,000 cars off the road each year. We've been recognized for our leadership in the industry. We were named the EPA Energy Star Partner of the Year just recently. REIT has named us the Leader in the Light Award each of the last 3 years in the data center category. And in 2019, we achieved an industry-leading 29 Energy Star and Green Building certifications. In sum, we are absolutely committed to delivering sustainable growth for our customers, our shareholders, and our employees.
All right, so when I see in your new logo section of the February 13 financial results, 250 new logos for social media applications, I have to believe that those companies are saying to you, hey, Bill, you know what? We're going to go with you, but we want to see renewables. We do not want fossil.
You're right. You're absolutely right. In some ways, it's table stakes today. It didn't used to be, but it is today.
Well, I got to tell you, when I see these things, what it tells me is also, people say, well, Jim, why is oil down so much? Well, why are fossil fuels down? Why is natural gas down so much? Because people like Bill Stein are listening to their clients, and they're saying, you know what? We can gain business if we run a cleaner operation.
Again, you're spot on. We're aligned with our customers.
All right, so let's talk about the worldwide growth. You just announced your third data center in Singapore. You're moving aggressively in Europe. You're going to hyperscale. Why those markets? I would think that the United States is the strongest market.
The United States is an extremely strong market. We've had tremendous growth over the last, really since the last time I was on this show. I was on this show in 2016, Jim. At that time, our market cap was just a little bit over $15 billion, and today it's $40 billion. Our enterprise value was $25 billion. Now it's $55 billion. So we've invested around the world since that time. We acquired the public company DuPont Fabros in September 17. Right. We announced a joint venture with Citi, sharing that investment with Brookfield for Brazil and then Chile. And most recently, we acquired Interaction, the large European co-location player. But we think the opportunities, Jim, we think that it's important to serve our customers around the world. We have a global platform. We have a soup-to-nuts product offering from small cage cabinet to hyperscale. We're the only company that does that. And we think that having these offerings around the world is absolutely critical for our customer base.
All right, so, Bill, earlier last night, I read through the Netflix conference call. Netflix actually had to suppress a lot of its business because people were running out of, the whole countries were running out of bandwidth. I've also been focused on people who have been working from home. Now, working from home must use a huge part of data center that had never been used before. How much more work goes into a data center? How much more business is there because of stay-at-home work?
We've definitely seen an increase in data center demand during this crisis. Most of us, you said it, are you and me right now. In fact, we're working from home.
Right.
So the video conferencing, social networking platforms, all of them are our customers, and we've seen an uptick in their bandwidth requirements. And the businesses are under pressure to accelerate their digital transformation. It's not just consumer to consumer. And post-crisis, we expect that IT departments will continue to beef up their infrastructure to support a fully remote workforce. In fact, I don't know whether you saw this, but in a recent Gartner survey, 74% of CFOs said they intend to shift some of their employees to remote work permanently.
That's incredible. The world is changing right now. One last question. Again, I'm focused on hope tonight. I don't know. I just feel like it. AI-powered tech for pathology research in one of your handouts. Does that mean that maybe the data centers are helping scientists to try to come up with at least a vaccine for COVID 2019?
We absolutely are. I mean, and one thing that we are doing is we announced that we're waiving fees for certain verticals for 6 months, connectivity fees, and those include medical, emergency services, educational, and government. So we're doing our part. We're trying to give back. In addition, we've given $1 million of charitable contributions to various organizations around the world to source a vaccine.
Well, let's hope we beat this thing. And Bill Stein, what a remarkable institution you have. Bill is CEO of Digital Realty, DLR. Remember, we said the REITs that you want to be in are in data center, and that is it. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.